Well, what is going on, guys, and welcome into the video. If you've been following my channel for any length of time, you know that I really don't like to say things like this, but I gotta tell you, the setup is there and we need to discuss it. This week will absolutely determine if the current rally can continue or if there's a lot more pain to go, and this was just the start of a much larger crash. This is going to be the week that shapes the market for the next quarter, maybe even longer. So we will discuss each one of those points today, what's going to happen with it all, what the reaction is, and what it means to you more importantly in regards to your stocks. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And make sure you got those little notifications turned on too. Otherwise, you will miss my videos, unfortunately, because YouTube's dumb and they won't show you my videos, even if you're subscribed. I don't know, guys, it's YouTube. We're basically at a massive tipping point in the market where the stage is set for stocks to maybe kind of file out of the danger zone a little bit. Not like Top Gun danger zone, but maybe finally come out of the danger zone per se. And these all need to go right in order for that to happen. So we need to talk about it. So it's a massive earnings this week with all the big dogs reporting all at once again. And so far, earnings have been actually not too bad, given that the earnings apocalypse was coming this time because, you know, in June it was coming and then it didn't happen. And then again in October it was coming and, well, it didn't happen again because, you know, that's kind of what short-term prediction folks do. They just kind of make prediction, and when it doesn't happen, they give you all the doom and gloom and tell you it's coming the next time. And then when it doesn't, they say you dodged a bullet, but next time. So far this time around, over 60% of the companies that have reported have beat on EPS, and over 60% of those companies that have reported have beat on revenue as well. So that doesn't sound like an earnings apocalypse to me at all. Now, to be fair and upfront, it's not like it was all, you know, greatest to the moon type stuff. Many of those companies had already kind of revised their guidance down, and yes, profits have continued a trend of kind of basically continuing to get squeezed once again this quarter, which we know has been happening for over a year now. But this has been far from the earnings apocalypse once again for the third quarter in a row. And I know that's actually six, but I meant the third quarter in the row. But don't worry, guys. I'm sure the apocalypse that will send the stock market down another 50% is just delayed until next quarter, because this chart right here proves it that it's coming next year. I mean, look, it's got lots of pretty lines and graphs and charts. And I mean, look at all that. It just proves it right there. Just look at it. And yes, I love finding those charts out there. They're really, really funny. And honestly, sometimes you will see people drawing charts. It kind of gets a bit ridiculous like that looks. Anyways, all eyes are going to be on Amazon for what the consumer is doing in regards to the economy, our spending habits, and all that sort of stuff like that, because we still know consumer sentiment is actually still at a pretty low number. But do our actions, you know, us the consumer, do our actions match that sentiment of it being so low? People can say the economy and everything else is in the toilet, but if they're out there spending close to what they normally spend at the same time, basically their actions are saying otherwise, and the economy is still actually pretty strong. And honestly, we've seen the GDP numbers out there reflect exactly that, with GDP growth once again happening for the third quarter in a row. That doesn't happen if the consumer isn't strong, at least here in the US. And in regards to earnings, so far, once again, the airlines are reporting records across the board. I mean, record revenue, record demand, record everything, and seeing no decrease whatsoever in demand. Actually, the exact opposite, with a few of the airlines actually guiding up in terms of revenue they're going to see for the rest of the year. That doesn't happen if the economy is in the toilet, but it's only one part of the economy. Amazon kind of covers a big chunk of the rest of the economy, so Amazon's earnings and, of course, guidance will give us our biggest clue to date on all that sort of stuff. If that is good, or at least okay, and they maintain guidance, there is chaos point number one to keep the rally going. That would mean the consumer spending is not only good on travel and leisure, but on consumer spending as well, and that bodes well for the consumer holding strong during this downturn. Next up, Wall Street will be looking at Google for what advertisers are spending, and are they seeing a slowdown, and if so, by how much are they seeing that slowdown in regards to advertising? Basically, it's a commentary on the health of businesses themselves, because healthy businesses spend more money on advertising, and when times kind of get tough, they tend to come back on that advertising. So when they cut back, how much are they going to cut back? And, you know, that'll kind of indicate how bad they think it's going to get. Now, the banks just said that corporate balance sheets of all their clients look pretty good so far, and in some cases great, so they know that they have the money to spend. But the question is, how much are they going to leave on the balance sheet to prepare for the slowdown coming later this year as the Fed rate hikes kind of start to take effect and really take full effect? So not only will the numbers matter, but also how they will forecast guidance for this year based on the advertising dollars coming in is chaos point number two. And then we have Apple, who has had basically 2, 3, 4 earnings calls in a row where they basically kind of pulled the rabbit out of the hat with ridiculously high expectations and everyone kind of missing around them and the market in free fall. There's Apple basically saving the day with incredible earnings quarter after quarter after quarter. It's literally been propping up the entire market all year long. So can they keep the streak going and give us positive chaos point number 3? Well, if Apple falters or sees significant risk in their business coming this year, expect them to finally fall hard, which will cause the entire market to fall as well. However, on the flip side, if they pull the rabbit out of the hat once again, and if new iPhone sales are still really good, and they had a strong holiday season, and they don't adjust their guidance down for this year, they guide the same or they actually guide up for this year, there is chaos point number 3, and that will almost assuredly lead the markets forward. And finally, we have the Fed, and yeah, I know we got to talk about it, guys. We got to talk about the Fed. If the Fed shocks us in any way, look out is all I can say, is that will be chaos point number 4. But why would they shock us, Luke? Well, honestly, it's not shocking to me at all, but it apparently will be for Wall Street. Because of these simple reasons. We have been discussing in our group almost every week since this whole mess started this time last year that the Fed has been very deliberate in their language and have perfectly telegraphed virtually every single move. What they say they will do, they have done, and if they change their mind or they change what they're going to do, they have given us plenty of time to adjust to what those changes are going to be. They haven't sprung it on us out of nowhere like they did in previous years. They've given us plenty of time to adjust. But unfortunately, Wall Street just doesn't listen, doesn't want to listen, whatever. Basically like this summer when the Fed said they were going to stay aggressive, but Wall Street started talking about not a 75 basis point, but a 50 basis point cut was coming instead of the 75 that the Fed said was coming. And then Wall Street somehow a few weeks later decided that no, it's not going to be that. It's going to be a 25-point cut. And finally, some said the rate cuts were over altogether this summer, which of course caused a massive rally through the entire summer. And that's exactly why we got that Jackson Hole speech that eventually sent the entire market to a new low just a little while after it. In my group, we weren't buying that rally in the summer on that garbage talk from Wall Street because we knew that's not what was going to happen. And instead, we were buying those lows in October. We were not going to fall for that Wall Street narrative because, hey, guess what? The Fed's done a really good job of communicating it so far. That's just a Wall Street narrative. And unfortunately, once again, the Fed has been eyeing 50 basis points this time around, but the Wall Street consensus is already down to 25 points, and there have been a few calling for a pause or no rate cuts at all this time around. So if the Fed does the 50 points we were all expecting, you guys that watch this channel, my group, and everybody else that pays attention out there, Wall Street isn't going to expect it, and it will be chaos for sure, especially if the rumor kicks up that no rate cut is coming this time around right before they actually have their meeting. And if chaos reigns, you had better be prepared because things will move fast. And if you think the media and YouTube and the market are all over the map right now and all over the map the past 6 months, honestly, the past year, you have not seen anything, my friend, because that will go into overdrive. Prepare for that chaos now. You have time, so make sure you have your plan laid out. And if you don't know how to do it, Google it. There's a ton of free content here on YouTube. Join my group or another group that offers that. It doesn't matter. Just prepare for it now. Don't wait until it happens and then go searching for all the fear videos that will explode everywhere and try and figure out what you should do. You will make mistakes, maybe even panic or FOMO depending upon what happens, instead of being able to calmly and coolly take advantage. So please plan and be prepared. Now, do I care about that or am I concerned at all about any of this? Honestly, no, I'm not at all. And I actually welcome it as they are just short-term headwinds that may give me some incredible discounts. And that is how real wealth is built through times like these. I mean, what? Suddenly Apple finally had a bad quarter and now it's a terrible company I should run from and not buy the dip at my price target if it gets that low enough? I mean, what? The Fed stays aggressive and now I'm supposed to believe Tesla's demand is going to fall off a cliff to zero and it's just a terrible company? That's ridiculous. It will simply be an opportunity for those that are prepared and have a plan to take advantage, so please do that most of all. And if you're looking to join my group to learn a lot of that sort of stuff, see my buy and sell alerts, my price targets, take some courses, a whole bunch of other stuff, make sure you check out the pinned comment down there and see if it's right for you. And click this video here if you want to see the 10 most important stocks in the stock market in 2023, and click here to see exactly what I'm doing in this market. So thanks for watching, and we'll see you in the next one.